Hello, everyone. Welcome to the Blockchain and Beyond, the podcast where we explore not just the technology, but people behind it. I'm Amina from UWBO, and joining today as co-host is Soheil. Today's discussion, the not just code, the human case for blockchain, features two remarkable guests. First, we have Pekka Kelkka. He is a founder of Papa Blockchain, recognized as a top 10 blockchain professionals in the Middle East according to DataTech. Pekka is a passionate advocate driving the awareness of blockchain's potential. Joining him is Angus John McCormick. He is a board advisor at the BioBlockchain Center. With over 30 years of technology leadership roles at companies like IBM, Cisco, and Siemens, he brings deep insights into blockchain, AI, cybersecurity, making him a valuable voice in today's discussions. And now I will hand it over to Soheil to lead us into this exciting conversation.
Perfect. Thank you so much. And welcome again to our lovely guests for joining us. Thank you for taking the time to be in Blockchain and Beyond. I'd like to just start off with, we have some things prepared. First of all, it's lovely to be at both of your presence. Me and Pekka, we obviously work very closely at TokenScope. We're doing a lot of things focused on the wider adoption of compliance and tooling within crypto. And Angus, who I've known for several years now, is working very passionately within the space. So I'd just like to pass it on to you folks and welcome you guys based off that lovely introduction Amina gave. So please.
So Amina, thanks for inviting me to the podcast today. And
Thank you.
for those that are listening and watching this, I hope it's going to be informative and interesting. I'm sure we're going to have plenty of debate and alignment on where things might be in the future and the present. And, my single thing is lessons from history. History always repeats itself, but in different ways.
Absolutely. Thank you for that.
Very good, Angus.
Yeah.
Yes, Amina, please go ahead.
Yeah, thank you. Just continue, please.
Yeah, Angus, I need to politely disagree. I'm not sure if history repeats itself, but it rhymes certain ways. And the phase we have today on the technology side is the most exciting in human history. That's why I don't believe that it repeats, but the rhyming is there. So that's I will give you the credit for.
We're going to have an interesting discussion because we agree on many things and we might find that we disagree on certain things. So that's going to be interesting for the audience. But the outcome of this discussion, I'm sure, is going to be profitable for everybody.
Yes.
Absolutely. I think that's why we actually had the idea to have this podcast in the first place, is to kind of provide some updates as to there's so many narratives that are taking place in crypto. So if all of us have that alignment within blockchain associations like the BioBlockchain Association and UWBO, which is a united World Blockchain Association, and that kind of standardization is happening, somewhat like ISO, right? ISO, the major standard, internationally. We can actually see a fast-paced advancement of this industry. So I'd like to ask you, gentlemen, in the first place, how do you feel the crypto market on a large scale is advancing, specifically with the whole proposition of utility within crypto? And do you feel like crypto is in a good place right now? I'd like to start with Pekka.
Thanks for a very, very good and interesting question. First of all, we all know that it's a very early phase still in this technology. 15, 16 years after the Satoshi launched the white paper was the 3rd of January 2008. But anyways, what's happening now, the most important thing to me is that now we have good constructive discussions with the regulators, lawmakers, because this technology cannot be outside society. So we need to be part of society, and it's happening now. So a lot to do. We have these crazy things happening very recently. For example, that even regulated platforms and applications can crash.
We're going to get there.
Yeah, but just give a little hint. But yeah. So but now but it's just that's a very good development. And when we're talking about the decentralization of internet, which will happen, that's no doubt it will happen, and we're getting there. But now we also need to understand that they are not new technology. AI. Actually, I just read an article that first AI conference, big conference, was held in New York, 19
Wow.
new concept. But nowadays the technology, if you think how much the compute and all kinds of needed elements for AI to be more effective, it's just now there. Our purpose is to make sure that we humans, we will control AI, and there's only one technology that can make sure of that, and that is blockchain.
Fantastic. Interesting to see the concept of internet being decentralized. I think Web3 is very interesting potential. Angus, please, I'd like to just reflect the same question for you to answer. How do you feel at the current state and moving forward within Web3 in general?
So I'm exceptionally optimistic about blockchain as a technology, and combining that with AI for my whole career, spanning back to 1985 when I was working on the first PCs with IBM before Microsoft launched Microsoft Windows, and working on centralized architectures with client server architectures and mainframes. To the present moment, here we are we're on the fourth industrial revolution with AI. And, the world in 3 or 4 years' time is technology is moving and faster than ever. And I always use a methodology. I always come back to best practice from my corporate life and before I became into this space 10 years ago. So I always think about the crossing the chasm. We have let's be realistic about it, we've got less than 2% adoption. And so if you're listening to this podcast and thinking about why and when I should get into this, there's a lot to learn. And we're still in the early stages of adoption. That means there's extremely high risk and there's extremely high reward. And you always have to look at the technology adoption life cycle. It's going to take off and there will be an inflection. And actually, ironically, it's going to come from the big corporate world first and the institutional world and reverse into retail. So I think that for the consumer, this is not going to be consumer driven. We have a very strong ecosystem in the decentralized world. And I'm personally a very big decentralized person, but most things are centralized at the end of the day when it comes to technology, whether we like it or not. I can go into that in a lot more detail. So in answer to the question, when it comes to utility, and this is the chasm that's got to be crossed, is the real utilities have yet to be seen. And ironically, until they're a bit like Web 2, had to come into full manifestation with e-commerce and the 2000 cycle. I remember that very well, when e-commerce was just emerging, and that's when it really became the advent of mass market. That was a centralized type play, and it has changed the whole world. Here we are now with the advent of AI hitting the same point, and in 2 or 3 years' time, I don't think we'll recognize the world the way it is today, with robotics and everything else that's going to come to the world in terms of what AI will do to our lives and to our work. So it's an enormous challenge because I think it is the space to be in, frankly speaking, because if I'm frequently asked the question, what should my children study at university or school? And there's not much education in this space. So we're providing an opportunity and an avenue and a conduit here to educate people. So communication with podcasts is what's changing a lot of elections, and the way that people behave. So this is a great medium,
Joe
a great
Rogan
medium to learn
info,
from,
yeah.
a great medium to learn from.
Hopefully we will reach that level.
Exactly. We're there. Let me just say it's past. It's past. It's in the rear view window. And so as we look at the next couple of years, it's going to be full of extremely high risk and extremely high reward. And we've touched on some of the risks already. Examples in the real-time news.
You brought this really good point that I want to segment into, which is something relating to a point that Pekka had brought up on one of his YouTube videos. Now, the title of that was Explaining the Tech, where there was a doctor by the name of Dr. Yanis who was quoting that we still don't have zero intrinsic value in crypto. Crypto is zero utility. So Pekka, could I just throw that to you in terms of, that video that you posted and a little bit ask you to elaborate that, please?
Yeah, first of all, the whole idea of this video was that one of my theses is that when it comes to, again, this big goal to educate people. But because Angus and myself, we are a little bit older than you guys are. So I started my first online company in 1994, and we were struggling with all kinds of things on the internet itself, first generation Web 1. But then everything developed fast. obviously, but also collaboration with the regulators was the key, with the technology itself, standards. And standards is this thing. For example, when I'm speaking at the events, quite often I ask the audience, do you know how internet works? Can you explain what is TCP/IP? And only if you're a programmer, you understand what is TCP/IP, the transfer protocol on internet. But it doesn't matter. What we need to develop as the next version of the internet, decentralized internet, the guys who are developing it, the technology needs to work, period. And then we need to provide the environment that is beneficial for everybody to join it on whatever role you want to have it there. And then this is the beauty of decentralization, because there's no central entities to join. If you can just will apply and will comply with the software that's programmed, for example, in smart contracts, and you can join freely. No questions asked. You can join, you can move away again. And that is the thing what is totally different than anything else before. And that's my thesis again, that you don't need to understand how blockchain works, how actually crypto transactions work, but you just need to make easy enough user interface and best possible user experience. And that's it. And then the technology behind it needs to be perfect, which is unfortunately not yet there, but we're getting there.
Awesome. Let's just have a look at this video from your channel, so we can plug it also, Papa Blockchain, on YouTube. So yeah, let's go into it.
Undeniable benefits this revolutionary technology brings to society. Let's keep it simple. 100% focus on benefits, 0 on the tech. Recently, I stumbled upon a fascinating interview on YouTube featuring Dr. Yanis Varoufakis, the renowned economist and the former member of the Greek parliament. During his appearance on the Times Radio YouTube channel, he touched on cryptocurrencies and his take was interesting. In the 30-second video clip, both Dr. Varoufakis and the interviewer argued that cryptocurrencies have no intrinsic value. Watch the clip and we will meet on the other side.
These cryptocurrencies do not reflect any intrinsic value. Trying to predict their value is like a cat chasing its own tail, because it's like, average opinion, trying to imagine what average opinion will be.
Well, that's my point, in the fact that it's not based on any intrinsic value. I mean, if you buy shares in Apple, essentially you have a bit of that company, and that company consists of hardware, consists of stores, it consists of infrastructure.
As you heard, the interviewer even compared cryptos to company shares, suggesting that owning Apple stocks means owning a piece of tangible company. But here is...
Interesting points there, interesting points. Yes, so very interesting points. Yeah, I just wanted, maybe if you could speak one or two things on that. And I think the wider perspective that you were trying to build was that we still have very lack of understanding as to what the utility is. Is that fair to say?
Well, again, I believe that to some level of you need to understand what happens there on transactions and on the chain itself. If you think it this way, and that's also kind of latter part of my video, that if you think that the blockchain, because to me, for example, there is no such thing than private chain or private blockchain, because the transactions on public blockchain will be certified and proved by data, and data are tokens, these coins and crypto. So if you go on this particular layer and function of cryptocurrency, that is it's mandatory. It need to run on blockchain, otherwise the blockchain does not work. So there's a huge value. Put it even more bluntly, we don't have public blockchain without cryptos. And then when it comes to speculation of the price and stuff, that's not for me at all. I fully support on decentralization and decentralized platforms and applications where everybody can participate by depositing little money or a lot of money on the blockchain to secure this environment. Because your coins and tokens on the blockchain, public blockchain, are data. And without this data, they don't work. So that is the most clear, beautiful description of what the utility can be and will be and is already today. And this is something that people need to understand. We don't have any central entity controlling these transactions and what's happening on the chain, because it's all on the code. And token is there. That's the utility there.
Thank you. Really well put. I think a lot of points of agreement. Angus, anything there that you feel strongly about or oppose, or, I think that video mentioned, the stocks. When you own a piece of Apple stock, you own a piece of the company. Do ETH holders or Aptos or SUI holders in crypto own a piece of that company? And could you just, answer in your own way, please?
No, they don't. And it's important for our viewers to understand this. At the end of the day, as Pekka said, they're only betting on the fact that this protocol or this utility protocol is going to derive value from some utility and adoption on the blockchain. So I'll give you two examples, one from history and one from the current, looking at present market. From history, there was a time when I come from building networks, the first internets and intranets, and the world of this is all enabled by the internet. So it is important for viewers to understand, as Pekka said, where blockchain come from. Blockchains are just running on a network, a telecoms network or some other network at the end of the day. And so it's important to understand how the internet works, because everything is connected together. And there's a lot of falsehoods then. So when it comes to blockchain as a technology is a game changer because of the distributed ledger and the nature of being able to get all that immutable data and visibility of what's actually happened in a database. So we can all see what that allows the smart contracts that we're all passionate about, because that means everything can be independently validated and verified in a way that's simple. So that's the lesson from history. Was a time when I was talking with the likes of, and I think what we're going to see is institutional adoption faster than retail adoption, because blockchain as a technology has enormous benefits. There was a time, back in the 90s, when I remember there was 20, 100 protocols that could be the winner for the internet. So as Pekka mentioned, at that point in time, there was no definite bet that TCP or Internet Protocol would become the de facto standard. And there was a long period of consolidation before IP took over from IPX and many other protocols to become the IPv4 version 4 for the de facto standard of the Internet. And that's what's built on. On the Internet, there's a technology transition taking place as well, which is something that's taken almost 20 years to happen, from IPv4 to IPv6. The reason that's important for people to know is scalability of the internet and security of the internet. And that's been driven by not less.
Have we transitioned fully into IB?
No, it's hybrid. Your viewers will know if they're doing 5G or 4G, 5G in particular, 5G mandates for mobile radio networks that you must use IPv6. But when I remember back then, there was a big argument about whether people should allow email and web access in the 90s, before the dot-com bubble came along, and dot-com and Web 1. And I remember talking to banks or to utility companies, to telcos, to retailers at the time, and all sorts of large corporations who were not sure that they should actually give their employees access to the internet for email and web access even back then. And by the time the dot-com bubble crash in 2000 came along, then we had mass scale adoption of the internet, because that was the industrial revolution number 3. And that's what made the world flat. At that time, we were saying the internet was allowing the world to be flat. So that's a lesson from previous history. So now we have blockchain allowing the world to be flat. But the people who should really benefit from this are large corporations. And they are adopting it. And that's why there's this scramble from all the top 100 layer 1s and layer 2s to get institutional adoption and usage of their platform. Because building a platform is the only way they're going to get to utility and define the use cases. And the classic use cases that we need to see now for retail adoption are going to be in the space of payments, as Pekka. It has to be, and that user experience is what's actually, and the confusion and risk around it is actually what's actually preventing large-scale retail adoption. Ironically, on the other hand, we're not seeing the inflection as we saw with the iPhone. When the iPhone came along, it changed the game on what was happening with BlackBerry, for example, or other companies. People they thought they needed to have a keyboard at that time, can you believe? And that was not that long ago, in 2006 to 2008. Now we're here in the world looking forward to the present and the future. We're now in the world of AI agents and AI doing everything for us. And AI is just code at the end of the day, and algorithms that consume compute and storage. Everything still has to run across a network. And it took a long time for cloud to arrive, because things had to go from physical to virtual, and then to cloud. Now we're in the world of cloud, and you cannot compete in the digital world as we saw even during a global crisis like COVID, unless we had these digital transformations taking place. So companies now, and this is institutional, are adopting the technology. First of all, they adopt the technology, and that's what's driving institutional adoption. At the government level, strategic reserves in crypto, and that's what's deriving some intrinsic value. Ironically, it's the fact that the market caps of certain cryptocurrencies are actually in the top 3 or 5 that's going to be selected for
Yeah,
some
I
of these
think
strategic reserves are actually defining the
yeah,
value from top
that's a
down,
good point.
not
That's
from bottom up. And the fact that
not from Burma.
even sovereign funds are going to invest in Bitcoin. And there's always
Yeah.
unfortunate message for the listeners here is be curious, but be risk averse and do your homework, because what's going to happen is there's got to be consolidation, and AI will drive a next generation of code and crypto that will be out. And the questions about apart from Bitcoin, which is truly decentralized, the next 10 or 20 or 100 cryptos in layer 1 or layer 2, their future will be defined on the adoption of usage. And if they can't get it in retail for the average consumer using it for some benefit, then it's going to come in institutional. And institutional, ironically, the global financial system through strategic reserves in companies and in governments is driving that adoption and centralizing it. And that's the nature of things. So there's two different things. There are things of what's the best technology and what's the best marketing and narratives that you're talking about, Soheil. On the contrary, there's also what the institutions are going to use, because that's probably what's going to generate the benefit for the business models of those large corporations and governments and organizations, which are by their very nature centralized for the purposes of
Yeah.
identity
Sorry,
and taxation.
Angus, can you hear me?
Yes, loud and clear.
Thank you. Actually, that just touches upon some of our other points. I want to just break it down bit by bit because you covered a lot of fascinating things there. I think looking at the role of AI and everything, it's very interesting. So I think that just let's maybe pivot into the next conversation regarding AI and crypto, this conjunction that we're in. I see a lot of use cases where AI is being brought into it. So, Pekka, I believe you were saying that there was the first AI event,
Conference.
which was in the 50s, which is
56.
surprising to many people, I'm sure, because they think it's just started a year ago, right?
ChatGPT.
Whenever ChatGPT came.
Yeah. Well,
Okay.
let me take this briefly. First of all, I need to go back a little bit to what Angus just said. 100% correct, Angus. There's no company to own on decentralized blockchain, but you own the ecosystem, and you can depending on the strategy what the token and coin has, you can even participate on decision making, and that's developing fast now. And that's the whole point. If you compare the company stock and the very sophisticated decentralized blockchain and owning part of this blockchain ecosystem, you are providing this incremental thing on the ecosystem, which is it's business. You don't own anything about the Apple factory. You don't have direct access to the profit. And on the decentralized blockchain, you have direct access what it generates to you, and it's a beautiful thing that if it provides you a passive income if you want to have it this way. So these are things that needs to be understood. And and another thing on your very great points, Angus, you mentioned that this blockchain is immutable. So what makes it immutable? It makes that the validation happens on these tokens, coins, and nodes, which is a totally decentralized mechanism. There's no central control. But if you say that there are any central entity to control, it's not immutable. They can walk back the transaction, they can check the transactions, and that is something that is in this level people need to understand what is a clear benefit of decentralization. So that's my take on this, what you understand.
Can I go on top of that, what you're saying?
Just Angus, if you could keep it in a little, because we wanted to go on. So please, 1 minute reply, please.
Okay, looking forward. So AI is going to change the world. That's happening faster than people realize. It's manifest in drones and robotics. I studied AI, did my degree thesis on AI back in 1988 as well. So on silicon versus gallium arsenide for transistor modeling. It was being done, as Pekka said, a long time ago. It's just coming to mainstream market, and AI is way ahead of everything, even ahead of blockchain, I would argue, because at the end of the day, AI is being used to code the next generation blockchains. or the next generation applications that will run on top of these things that will derive utility. So most jobs are going to be made redundant by AI, even if you're a coder, in the next 3 to 5 years. So even if you're an IT specialist, that is going to disappear. But that's going to impact whether you're a lawyer, accountant, whether you're studying at university or high school, whatever you're doing in life, just be prepared for a game-changing moment, whether you're in defense, whether you're in utilities, whatever you happen to be in, just be aware that it's the thing that's a leading indicator of what's going to happen in the future. And going back to the past, just to back up what Pekka, despite the fact blockchain is a database that's distributed ledger at the end of the day and can give distributed accounting or modeling. At the end of the day, everything is tracked and traced because it runs over the top of the internet. And everything on the internet has an IP address, a MAC address, and everything is measured in terms of the network for round trip time, quality of service, and number of packets dropped. And we can see where everything's going from and to on the metadata. So in short, for the non-technology people listening to this, the internet is flattened the world and has given us Web 2 of e-commerce. The Web 3 transition to cryptocurrencies is like the next generation financial internet. But we have to also be extremely risk averse and cautious and mindful of regulations, because the biggest thing that's holding things back, and it's manifesting itself in things that are happening, is some irregular things that you would say that are happening, perhaps due to insiders or to things happening because things are not properly regulated. And the outcome for some unfortunate people will be in the future, there'll be retroactive taxation coming to everybody for transactions and capital gains they've made in the past. And people think it can't be tracked and traced because it's on the blockchain. On the contrary, they probably all touched a centralized exchange at some point, and all the data is held centrally. Just personally, from my point of view, it's an amazing time to invest in crypto. It's an amazing time to be in technology, but the world is flat, yes. But the fourth industrial revolution of AI and AI plus blockchain that's happening now, unfortunately, will keep the world flat, but it's difficult to get away from centralization. And what that means is your custody of your assets are under bigger scrutiny than ever before, not least because all the governments need taxation revenue.
Absolutely. I think those points are well taken. It's very hard to evade full centralization or even part centralization. And I think a lot of what we have is semi-decentralized systems in play. As you said, you have AWS in the back of a lot of these blockchains. But even to your point, I think that's
that means,
really,
excuse me to interrupt you.
Yes, sorry.
You've got to be black, white, or gray, right? So if you say it's all centralized, that's the fact.
Yeah.
With the exception, at the end of the day, with the exception of Bitcoin, which is arguably centralized due to energy consumption and mining.
I see Pekka shaking his head, so I just wanted to get his opinion on that. Maybe
maybe the legal structure or the foundation or the way that a token is run for the point of view of value of that token utility. And that's why we have security tokens at the end of the day. So I know that Pekka is big on security tokens. I'm watching and debating things with them in the past, and I really respect your view, Pekka, on these things, because your content is always based on your experience and your wisdom. Pekka, what I do know, and I don't know everything, but I do know that you're a man of risk aversion and you're looking for that real utility. A good discussion for us to have on here is what is that real utility? Because I'm building these things at the end of the day, and I just know that there's a lot of fallacies out there, but fallacy number one is that decentralized exists. Unfortunately, the world we live in is centralized.
Interesting.
Much as I might want the panacea for decentralization, it's a fallacy.
Yeah, sorry, Pekka, please, floor is yours.
First of all, for everybody to know, this was not a paid commercial from Angus to me. Again, decentralization is a process. And Angus, let's go back, because we have this history to be part of the internet from the first days of launching the Netscape, the first commercial browser in 1994. So same way that internet developed to be a fully blown global communication and transaction network, also blockchain and decentralization is a process, and process does not go like directly one way. It goes 2 steps forward and 1 step back. But decentralization the need for decentralization is there, and you just don't need to listen me or anybody else who's a big advocate of this. Listen to Larry Fink, who's developing the foundation of their first tokenized fund is Ethereum platform, and it's a security token running on decentralized platform. Why? Because it's the most secure, much secure than the internet is today, Web 2 is today. And then again, it's totally legal because it's a security token on top of that. So this kind of thing it's there already. And that's something that everybody needs to understand, that there's nothing like a futuristic sense. And again, back one more thing when it comes to this owner thing and owning something. If you own company stocks, yeah, you own internet. If you want to own the internet, because you own a part of the future internet, of today's internet already, and future internet, if you want to be polite and kind enough to provide the data to internet on decentralized chains, because you secure the transactions the decentralized way with your token and coin on the network, and it's very kind to you. It pays you back passive income, and that's already there. Of course, Angus, you pointed a very clear thing out. If we have these centralized exchanges and centralized anything like custody services, nothing to do with the blockchain, not whatsoever. You can name the asset there whatever you want, crypto, token, whatever you want to do it, but it's centralized, and there's a centralized entity controlling everything. And this is so important to understand what means if you own a self-custody on your tokens and coins, or you want to give the custody to the third party, which probably are not even licensed or regulated anywhere. And that's a risk thing that you pointed out. This kind of education we need to give to the people, not necessarily how the transaction works and functions and so forth, but to understand the risk, as you pointed out, Angus, but also the opportunities. And opportunity today is that you can be part of internet already today, and internet pays you back, and that's it. And then you can take a big risk and go to whatever centralized exchange, and even the bigger ones has been hacked recently. So these things, this is the thing that you need to understand what kind of risk and what do you want to do with it.
I got lots of thoughts on that, if I may, Soheil.
Sorry, because we're restricted for time, I think let's finalize that and let the people discuss what they think in the comments section, and then we have all of your ads and everything there, so they can freely discuss with you there. I think we're going to have more podcasts in the future. So I'll just move to the next segment, major segue. Last week saw the crash of a pretty big cryptocurrency by the name of Mantra, popularly known as OM. The CEO, JP Mulligan, has been on a tour. He's been doing a lot of damage control ever since then. They actually signified some of the points that they were going to do, like a burn, etc., etc. This was actually noted, Angus, since you're working with Dubai regulators and within Dubai Blockchain Center, you're touching upon that. I think you might have, something to say here. So my question to you is, do you think that will be recoverable? And I'd like to also get to Pekka, but let's start with Angus.
Okay, so as Pekka mentioned earlier on, this is not a paid for commercial. This is my own points of view, and this is not representing the views of Dubai Blockchain Center or anything in the UAE. Let me be crystal clear about that. But it's coming from my experience and, as we said, wisdom of the past predicting the future in different ways. So you've got to build things on strong fundamentals, strong regulations and controls. So I'm not going to comment on that specific incident, but I could just guess. I don't know the details of it, but I've certainly done lots of digging. You asked two questions there. So the underlying principles of the organization are strong in terms of what they were trying to do. And when you look at what they've done in terms of security, tokenization, and that side of things, it's good. But the unfortunate thing is, the lesson to be learned here is when you have an issue like this that impacts the market, as we know from any stock that has an issue in any exchange in the world, it always has a difficulty recovering confidence and sentiment. So I think the challenge is you're talking about sentiment or narrative versus what actually happens. Every time a major chain or layer one has an outage, everybody knows about it and it just drops their confidence. That's why, if you're building utility networks, telco networks, enterprise or banking networks, that's why mission critical things are taken so clearly. And you could point to crypto hacks. Normally I'm a crypto specialist, at the end of the day, in cryptography and in cybersecurity in particular. And it's very rare that technology was the factor. it's normally due to human behavior. That was the factor. And I would say that, you can put a lot of preventative measures in place, but unfortunately, most cybersecurity hacks happen due to insiders or what's called deception. Deception is a technology term, not a term for a type of cybersecurity where people trick the organization or structure into doing something that they didn't expect. So you should always plan for the worst case. And I do think it's a minor setback for the industry, but overall, I'm actually personally very bullish on crypto. I'm all in on crypto and blockchain in particular, and on AI, but only on the basis of meeting proper regulations and taking proper preventative steps from best practice over history, whether those are technical, cybersecurity, legal, financial steps. And that's why people are, as Pekka said earlier in his point, are going for, potentially centralized things with exchange traded funds. They want the insurance to know that they're not going to lose their money. But at the end of the day, those things are happening, and those are, I think, in the short term, are going to drive crypto adoption in general, because it's going to be institutional, government-led, pension fund-led, or organizations that have huge asset management allocations. They're the ones that are buying the best in class, and they've got the breadth and depth to do the analysis and build an investment structure around exchange-traded funds to give you access to crypto. But that's not always the best way. I would encourage and say as Pekka said, that you should take control of your own financial future and your own custody if you can do that. But you must be trained and educated before you jump into that. That's what I would say. I hope I've addressed your question, Soheil.
Absolutely. I'd like to just pass it on to Pekka to share his thoughts.
First of all, the decentralization, again, it's a process, but it also touches so many elements and the ecosystem itself. And obviously what we experience, this unfortunate thing, which is hurting the entire industry, the token value dropping from 6 billion to 300 million or something overnight, practically. It shows that there's a certain central entities controlled in the token. And if you think this kind of distribution of the token, and that's something that also I hope that regulators do understand this, that when you are really given the licenses to protect the investors and regulate these platforms and tokens and applications and services, you need to understand all the aspects of this ecosystem. And that's the distribution is very important. That was the if you think, for example, you've got Soheil knows that I'm a big supporter of Ethereum and Ethereum ecosystem. Never mind the price development. That's not for me at all to discuss about. But the decentralization, if you think Ethereum, can this happen to Ethereum? No, it cannot.
No.
Can this happen to Solana? Not really, because the whole ecosystem is decentralized enough, and that is really important to understand. Also, the regulators too. Look at the mirror, check what we really analyzed about this particular blockchain before we gave the license and regulated the whole ecosystem and platform.
I think that's beautifully put. I just was watching a video before that, and we were going to show it, but I don't think we have enough time. But it was a YouTube interview with the CEO, and he was very adamant to make sure that, as he mentioned, they're working with very big institutions, obviously, to support their ecosystem. And he was very adamant to mention a few of them sell a single token, but he didn't mention the rest. So he mentioned Shuruk, Laser Digital, a few of the market makers, but he left out a few, which were significant stakeholders. And I think, read between the lines maybe on that one. So moving on from that, I think really I think the closing thoughts on those points would probably mean that, to touch upon Angus, that we need to kind of implement better regulation. As Pekka said, if we had some element of more decentralization, whether it's in the tokenomics, the actual token itself, that would be something that would protect the consumer, because right now a lot of people have ended up suffering. So there's going to be a lot of learning points from there, and surely, if we're able to implement them, it would be. And I think we could look at good ways of implementing that, in my opinion. So that's a little bit, I think we've touched upon that. One of the exchanges where Mantra was listed was OKX. So brilliant segue. into a next topic. So recently, they've just settled with the DOJ, the Department of Justice in the United States. There you go. Thank you so much, Amina. So that's expands into U.S. after $500 million settlement. It's not a chump change, I don't think. So be prepared for some very big things from OKX, which obviously last year we had the Binance settlement. CZ spent a little bit of jail time and came out, and he was here and everything. So, yes, gentlemen, I think, Angus, you're going to be speaking with OKX in the future. You have some relations there. So please share your thoughts on this.
My thoughts on this is that I think 2025 and 26 will be a year for the industry consolidation and becoming safer with best practice so that things get clarified by regulations in different parts of the world. So that will actually still provide us a perhaps less risk opportunity for people to invest in the coming 18 months, but it's still early market days for investing in blockchain and crypto. But for those people that are going to invest, I just say, make sure you do your homework on who you're dealing with. And if you're going to use centralized exchanges, then make sure you actually very carefully understand what could happen. We've certainly seen some other spectacular things that you haven't mentioned. We've mentioned Binance, but also FTX. What happened to FTX and Luna? People forget. So the industry is growing fast and it's in the early stages of maturity. That is an opportunity and a challenge. So I think what we're going to see here, and I'm not commenting on this article specifically because I don't know the details, obviously, but I think, the fact that you have to make that level of settlement means that you have to make sure that you adopt future best practice. And I think this industry, and when I say the industry of crypto specifically, needs to understand the fact that best practices are put inside there, because human behavior is, whether we like it or not, defined by greed and fear. And really, at the moment, people may want to get into things, but they should really understand the risks. And at the moment, I think we're in a period where I think things will come strong again, whether it's in the next 18 months or whether it's in the next 4 or 5 years. I'm very bullish on this industry and the innovation in it in general.
Perfect. I think that's a bullish sign to see those things happening. We should ultimately see what the price of Bitcoin will be at the end of the year, right? With all of these movements and this crazy period of consolidation that we're in. Pekka, please, do you think these are bullish signs that these settlements are being made, or bearish signs?
Well, again, this tells that the particular thing that we fully agree, Angus and we agree, we're good friends, Angus and myself. But
a lot of agreements.
But it's a very good
Sometimes
debate
not.
always. Yeah, but
Yes.
it's the things are we are not fighting with each other. There's opinions and stuff. But FTX, there's nothing more centralized than FTX was. It's a couple of young guys cheating money from even the big investors and big institutions. They stole their money. Simple as this, and totally ignored by SEC in the US. That's it. Nothing to do with blockchain. Not whatsoever. A single ankle or thing related to blockchain. And Terra Luna, they invented the craziest mechanism of algorithm, their stablecoin, the crappiest technology you can imagine, which also needs to be understood by regulators' perspective. And this needs to be, even before it's launched, it should be removed from the world. Because this kind of algorithmic stablecoin, what they had, it was so easy to understand that sooner or later, when it's big enough, that will be destroyed the way it was destroyed. I'm not saying that the algorithmic stablecoins, that's the future of the stablecoins, by the way, whatever I believe it is. And we have DAI already, which is the backed by bucket of algorithmic or tokens itself, and it's really backing the dollar beautifully. So the mechanisms are there, but if you have this kind of technology, that to start with is really vulnerable, and the risks are 100%. If 100% risk is there, it will happen. It happens. Those two things need to be understood. So again, that's something that is obvious that we need to explain why these things are happening. Central control on the young guys stealing money from from everybody playing around with all kinds of money, billions and billions of dollars, and then the technology that couldn't last and was very, very breakable, and that's what happened. So those are my takes on this. And I believe that what's happening now in the world, that also the wake-up call for regulators about the mantra. So that's they need to dig deeper on what's happening there. And Angus, your baby now, it's not easier when AI will be mingled with this technology. It's getting much
Surely it
more
can help. Surely it can
yeah.
help, right?
What
Surely it can help.
hacking is much more simpler with the if AI will be implemented.
Correct. From the other side, though, as you allude, I guess it's a great point to use to, enable to counter those problems. Only see them using the AI tools to, and like Angus, you said this perfectly. Right now, you don't need to be a C++ or a JavaScript programmer to learn how to write essentially out to update or, to make models or AI models anymore. And, tools like AWS SageMaker, XGBoost. XGBoost, you can just open up, drop down a machine learning code and just add on to it and alter it, and then you're good to go. So with the advent of all of these, I think there's really interesting points there. And so, yeah, by the way, Pekka, so it's bearish or bullish for Bitcoin if that settlement?
Yeah, well, again, the way I'm introducing this to everybody, that we people, humans, humanity, we need to save AI for us, and there is only one technology to do that. So there needs to be decentralized verification, whatever happens on AI. If decentralized verification is not there, there is central control, and also what will be the future of this AI agent and everything on AI is that they need to be related to token transactions. And we need only those AI agents, for example, will control the transactions will be controlled by the token. There's a mechanism, of course, on a smart contract that if they violate the system, they violate the whatever rules and conditions there are, they will be punished. They'll be removed. The tokens will be removed from these AI agents, and they cannot transact anymore. Because they will be very fast, so autonomous already, and trading and discussing and doing decisions by themselves, these AI agents. And if that's the case, we are losing it big time. And as Angus pointed out, it's happening so fast. We need to understand that there is a technology to support this, but there's also regulators to understand. If we leave AIs to develop the way they are developing, we are screwed. Excuse my French.
Fascinating points. I'd like to just say on close on the thing is I'd like to close on positive news if there's anything. So yes, I'm thoroughly enjoying this conversation and sitting down. I would encourage anybody who's in the ecosystem to reach out to these two gentlemen, because the level of experience that they bring to the table, and you can only reach that through skin in the game, and they both have plenty of that. They've experienced many cycles in this industry and offer valuable insights. So on a close, to hear that both of them are very positive on Web3 and Bitcoin, I think it's also bullish for us.
Yeah, I mean, the technology is just an enabler. So whether it's blockchain, the internet, Wi-Fi or connectivity is up there now with food, right? The whole point of the internet is connectivity, right? And it's up there with food sustainability for most governments. If you're not connected, you can't trade, you can't compete, you can't defend yourself. But there's also, and it's the same here with what we're talking about. So blockchain and AI is way ahead of people think it is today and where it's going to be. And that's the lesson, whether AI is being used for marketing, or whether it's being used for market manipulation on the markets. And it's the cure for many healthcare, education, sustainable initiatives that are going to help us have better humanity. But it's also the marketing and things that can be done for manipulation of fake news, and we really don't understand what's being traded or what's actually being hacked, and our identity and information is being mined. So this is the big and actually the fun part of the whole discussion. But in terms of the place and the time to be in life, this in technology, it's never been a better place to be in blockchain. Never been a better time to be in crypto as well. But we have to understand that crypto is going to accelerate faster because of AI. That's simply just accelerates the whole market. And what's going to happen with governments and with the banking sector will drive that, whether we like it or not. And the decentralized world will still exist for sure, in my personal opinion, that the humanities need to want to do that, but it's just how effective it's going to become. And for sure, I think this is in my life just unbelievable, the speed at which things are moving. And they're moving faster than people realize.
Yeah.
Fantastic to hear. Sorry, oops, I just over there. Yes, Pekka, in closing, do you have thoughts that you would like to share as to, I think we have to be implementing a little bit of realism to the conversation also because, we don't have all rosy stuff. We try to make a balance. We show one bad news, one good news, right? So I think that's also a nature of the progress. It's one step backwards, two steps forward, and sometimes we see it go two steps backwards and we take one step forward. So do you feel like this rate of evolution is, from what you've experienced being in this Web3 space, let's just say, for this long? Do you see it actually evolving? Because I think that video that you showed, the gentleman was pointing to, hey, look, we don't really have that much true value as of the utility. But as you mentioned, for consensus, for staking, for validating, for rewarding participants, I guess good. Maybe we still have some more ways to go in terms of that. Would you agree with this, or do you think that it has to be put into perspective?
Yeah, absolutely true. As I said, the decentralization is a process. Like internet development was a process. There are certain points of the development phase that it's a frog flee forward, and then again it goes back a couple of steps. But that's also something that is happening now, and maybe the little bit of commenting what Angus said, that the internet will be as it is. It's transaction and the communication. It is not. It is also the owning the thing. It's ownership. It is the monetization of this network. What is called today internet, and also future called internet, but it's a number of something like Web3. That's a huge difference of what we have today. Because only a couple of guys in the world are making the money using our data. So that's it.
Yes.
Then that's the thing, that why I believe that society needs this, and also big guys, they are supporting this idea that whatever there is on the internet, the data, whatever content or data is owned and controlled fully by the owner of this data and content, and then this owner of this data and content can monetize it if they want. So that is the big change of internet as we have today, and Angus pointed out, a flat internet. It stays flat, but there's so many fractional ownership of the internet in the future, and that's that's how I see this is developing now.
Is that your term? I think that the flat internet, is that a new term, or is it related to flat Earth whatsoever, or not?
No, it's related to
No, not flat Earth.
It's just in the third industrial revolution of the internet, which we've been living through and we're still living through, the internet made the world flat. That meant that we all had access to information. That's Web 1. Web 2 was when we were able to start trading and doing e-commerce, and digital transactions. And here we are now, where the intrinsic value of the token is based on its use case and the benefits that you can derive from the products and services on that. And you hope that, as Pekka says, that your identity and data is going to be protected because it's immutable. That's a good discussion for a future debate, because I think it's easy to be misled on what is there. But the fundamentals of technology investing, which is what crypto is at the end of the day. It's you're investing in some future technology or future projects or future companies or future tokens or future use cases. They're going to be manifested in adoption, either in retail, business to consumer, or business to business transactions. And the fundamentals are only based on the perception of the value, the sentiment and the hype around them at this point in time. Now, that's not new. That happened in the dot-com bubble of the late 1990s.
Absolutely agreed. Absolutely agreed on that.
You just got to be ready for a very big ride of market volatility. anybody in this marketplace, you know, if I talk to my mother about it and try and explain it to her, which she frequently asks me about, then I have to say, and we're all talking to our mothers at the end of the day, right? And everybody in this channel can try and put it down in simplistic terms. I hope everybody can. Then that, it's about the adoption of technology, and really, once it becomes mainstream, that's when it becomes value. So that particular video actually has valid points. There is actually no really, I know Pekka might disagree with me here, but there's no really true intrinsic value. It's based on supply and demand and the price people are willing to pay for that. And the utility is critically important in the next phase of crypto and the adoption of real world asset, which I think I can agree with Pekka on, since I know and aware of his content that he's delivering for the world is really wise words. And I would listen very carefully to what Pekka is saying with complete respect. So I just think that my concluding comment is that, this is a place to be in, and there's no doubt about it. But you should stay positive, but you should also stay curious. And you should always be educating yourself on the risks, and don't just follow the herd. I mean, I think the only thing that I want to separate in an earlier comment that you said is, at the end of the day, everything's just running on a distributed database, a blockchain. Yes, but that runs on top of the internet. Yes. But Bitcoin and everything else is just a protocol running on top of that. Yes. And so Bitcoin is the only thing that actually is there, and it's very different from everything else that's out there. So I think just be ready for huge highs and huge lows, and don't get into it unless you've done been curious and done your research. Don't just follow what people are and what the influencers are saying. Do your own homework.
Perfect. I think one of the points really well touched on is I 100% agree. It's so much sentiment there, but that doesn't mean that there's no utility. I think this is the part where we need to align to make that, it is 100% to a lot of sentiment that is pushing these tokens up and down. I'll give you a case in point. Solana has not all of a sudden just gained all of this development and transactions throughout a year when the price went up. It was actually there. There was developments on it, but unfortunately, FTX crashed. FTX had a very good relationship to Solana, and it brought the token all the way from $100 to $2. And that's
Right,
why we
if
say...
I could interrupt you for a second, because it's an important message for the audience, right? Separate sentiment and narrative, which is effectively, emotion and marketing, from utility and use case. You have to see that. You should really look at those, as Pekka would always saying, those underlying use cases and be able to test drive it yourself. You don't go to buy a kettle unless you try it out, or a car in the showroom. So just as in the same way, if you're buying crypto, make sure you really understand the reliability and serviceability of what you're actually buying. Because at the end of the day, you might buy it and there may be some problems. So the market, as you said, is being driven by sentiment, and sentiment is forward looking, or narrative is current. And it's completely different from looking at utility and fundamentals, as you would with any investing, whether you're investing in Bitcoin or whether you're investing in crypto or gold or some other token. You'll do your research and make sure you don't just follow the marketing and sentiment all the time. In fact, I'll give you one last lesson from the last 4 months. The people who've become the top 10 richest people in the world have all become 20 to 25% poorer since the start of 2025. The only person who became richer in the last 4 months has been the Sage of Omaha. So the only guy is almost 100 years old who's actually become richer, and who cashed out earlier based on fundamentals, nothing to do with sentiment or narrative. He based on fundamentals. So Berkshire Hathaway and it's not an advert for that, by the way. This is not an advert. It's just, again, look at the fundamentals. And, it's interesting how all the other tech moguls in the world, who are way richer in some respects, potentially have doubled or tripled their wealth since COVID, have actually had a big hit in the past 4 or 5 months. And the only guy that didn't do it was the guy that looked at the utility, the fundamentals of the business.
Can I say one
Yes, please.
last thing on this intrinsic value? Because I want to clarify one thing, and this is not me. Listen
Sure.
to guys who are running the world, the biggest investors, the biggest owners of every infrastructure, biggest owners of the networks. For example, the technology that is picking up now faster than that you cannot find that information anywhere on public domain, is decentralized physical infrastructure networks, which means that all these telco networks, communication networks, power grids, everything will run on blockchain. It's happening now. This is still experimental level, but it is still developing so fast. If you have a little time and check, for example, what the biggest investors are now pushing, they are pushing this particular thing, and decentralized physical infrastructure networks. That is the foundation, by the way, for the next internet. And there's a really great intrinsic value because they don't work without coin and token. So that's my last comment on these particular intrinsic value discussions.
So I'm gonna just totally agree with you on some points, and a fascinating discussion for future, because the blockchain, that part of the network that's part of the underlying infrastructure, is one thing, and that is totally different from the token and the tokenomics and the utility value of a token. So these two things are completely separate, and you should always think of that. I'm absolutely clear that blockchain is an accelerating technology by itself.
Pekka's shaking his head.
I know, but I know he is.
No. Blockchain does not work without the data. If you have private chain, why would you have anything on private chain? Why don't you just stay on AWS or Azure? Stay there. But if you want to have a decentralized, secure network, you have decentralized implementation of everything, and they don't work without data, and token and coin are data there. Fundamental thing that people need to understand. And this is what big guys are supporting now because of it's more secure, it is it's cheaper, and so many benefits now compared to what we have today when we are implementing these deep in networks for all kinds of businesses in the world. So and that's I don't want to argue any more about this, but crypto and blockchain are creating one ecosystem, and they don't exist without each other. So that's the thing. And I'm not talking about buying a whatever shit coin, whatever you want to buy and put it on the central exchange. Do that what you want, but this has nothing to do with the fundamentals of distributed ledger technology, the public blockchain.
Amazing points. I think both have served you've done the cases justice. I like the comment. Amina, what do you think? The comment sections after the video, hopefully we can get some engagement on the YouTube channels and
Yeah.
what
For sure, our audience can comment below and give their own feedback.
we're still
Utility tokens, what they think.
amazing. I think these conversations, Angus, yesterday we met in person, and I think the brain stimulation, this type of conversation is very, very needed. We need to engage more in these conversations, and I think there's very viable points on both sides. I think that we're somewhere in between where we do have a lot of sentiment, and yes, we don't have too much decentralization. Bitcoin is very decentralized, as you mentioned. So yeah, it's going to be really interesting to see how things develop in the future with all of the new projects and protocols. There's definitely a gap for a strong, viable competitor to Ethereum. I think a lot of the ones that have been there have come and gone, and I believe also, Pekka, you're a big believer in Chainlink's future. And some other ones of that nature, Cosmos, those ecosystems, big fan. Maybe some of them aren't all the way there, and that's very interesting to hear from Angus's side also. And I'd like to finish off with a thank you from UWBO and TokenScope to our lovely guests for taking their very, very, very valuable time.
Yeah, excited.
And Amina also for the post.
Thank you.
Thank you, Amina. Thank you, Pekka.
Thank you, guys.
Thank you, Soheil. Lots more
Very
to say.
great to be
Just
with you guys
began
here.
the subject. Thank you.
Yeah, sure.
Thank you, guys.
Thank you, guys.
Okay, we'll wrap it up. Until next time.
Yep. All right. Thanks, guys. Thank you.
Bye bye. Have a nice
Bye-bye.
day.
You too.